All right, so right now we should talk about, or we want to talk about, should he trade or not? So, quick story here. It happened, I think it was a few months ago. Let me just switch to the iPad here, where I did a video about Jason. So, Jason is in college, had saved some money. He had saved $20,000, and he also received some money from his parents, and he used the money to trade. And this, when his parents found out, they said, you should stop trading. And so he was asking us for advice. So what should I do? And we did a video on this right here. As you can see, we'll put the link into the description. So Jason just sent us another message a couple of days ago. I want to show you what the message said. And I think this is really cool to talk about this today because it's a question that comes up very, very often. So here, Jason said, okay, I just got a job. And I'm putting around 70% of my income into my trading account. If you remember, I'm a student. I've reserved some money for trading the wheel strategy. It's one of the strategies that we like to trade. So now he says, okay, what should I do? Should I actually take the money that I can save and put it into a trading account? Or should I invest just in an index ETF, let it grow? Because right now, I mean, index ETFs have been doing great over the past, 10 years, 12 years? Now we talk about this.
Yeah, it's a great question. First of all, I have to say I commend you for putting that much of your paycheck away at such a young age. I wish I did it. I dabbled with stocks back then, and I was trading stocks at your age, but I really didn't have a sophisticated approach or strategy. It was back when you had tech stocks just going crazy. So kind of akin to what Bitcoin has been doing the last couple of years. That's where I got really interested in stocks, but I didn't have a solid strategy. I really didn't know anything about the markets. I pretended I did. And also just saving that amount of money. Awesome job. So you are on the right track. And then the next step is, what's the best thing for you to do now?
Yeah. And just very, very quickly as a prep talk, also, I will only be starting the wheel after I've done 50 plus trades in a simulated account. So as you can see, Jason is ready for the markets. And this is what we talked about in the previous video. So we had actually 5 criteria that I ran through in the previous video. It was his account size. Is his account size sufficient to trade the wheel? And yes. Does he have a solid trading strategy? Yes. Does he have the trading discipline? Please watch the previous video where I talk about his trading discipline. Absolutely yes. Does he have realistic trading goals? And yes, very realistic trading goals and a solid plan. So based on this, back to the question here, because I clarified and said, okay, so let me make sure that I understand how much can you put away each week? Sounds like $500 per week. And again, good for you for not, living a college kid's life by blowing this money on stupid stuff, but by thinking about investing and trading.
I invested in Jack Daniels. That's another story.
So let's take a look at a weekly chart, for example, the NASDAQ. And we see, if we go back to 2010, 2009, I mean, it seems to be a smart idea to invest in an index fund. However, what can we expect with an index fund? I mean, usually we can expect around 12 to 18% per year. Let's take a look at this year of where we stand thus far. And we're looking at the NASDAQ. And so the NASDAQ right now, year to date, we're up 14.6%. Not bad. September is a little bit rocky. October is a little bit rocky. So we might have a Santa Claus rally. We might have correction. But I think the 12 to 18% are very reasonable. So sounds like a solid trading strategy. Even the S&P 500 up 16%. The Dow up 13%. So that's good. But what are your thoughts? One of the questions that he asked, and this is where I want to touch on this. Do you think I should focus on investments rather than trading as I'm young and don't need to rush? See, I think it's the opposite. Let's talk about this.
I agree. I mean, this is where you have time on your side. You have the ability to be a little more aggressive, right? A lot of times when you first get a job, at least in the US, where it's a decent job and there's a 401k and you get to pick from conservative to medium aggressive to aggressive, and on the aggressive side, you're at 12%. You're allocating this money depending on how much time you have. Well, I think with time, you have the ability to be wrong and to be a little more aggressive to get those bigger returns because you have a lot of time on your side.
Right. And let me just share my notepad here and talk about it. So you are able to put away $500 per week. So this is $2,000 per month, which is in addition to the $20,000 that you already have in your account. So just think about it. If you would put this, let's say things are going horribly wrong and you would lose all the money that you're putting away right now. How old are you? Like 20, 21, 22 maybe? I mean, you have so much time. Once you're done with college and you get a real job where you can maybe save even more, you could absolutely start over. But right now, you have this opportunity to get a head start. And as you know, with the wheel, if you're not using a margin account, you can expect 30%, especially when you're trading it conservatively as you want to do it. And if you're using a margin account, you could make 60%. And we talked about this in the previous video where we said, you know what, you do have realistic expectations because you had some goals. And this is what I really like about you. You had a 3-year goal. And I love it if you're not having a short-term goal of saying, oh, okay, put this all on AMC or GME and to the moon. No, you want to realistically grow the account. And I talked about it in the previous video with a very, very solid plan. And I do believe that there's a very good chance that you can achieve your goal, especially if you put more money into this trading account.
And that's the thing. When you're at a younger age, small, consistent returns can be a little bit boring. And when you're at a younger age, you might think, oh, if I have $5,000 and I make $1,000, that would be boring. Or if I make $1,500, that would be boring, because we see these AMC swings or GMC swings that aren't repeatable. But if you're consistently getting those returns and you're a little bit aggressive, the thing about the wheel is I believe you can outperform an index with a little management, and you can navigate the markets better. So you could choose to just be all cash if things get tricky. And so you could avoid a dip that you might experience in a fund. But then you can also bring in more income, just bottom line outperform, but also have a buffer, right? Because when you're selling puts 5-10% below the market, you're basically accommodating a dip, which you wouldn't be able to do by just buying a fund.
So here's the most important thing. When it comes to trading, you should never trade with money that you can't afford to lose. But let me ask you, Jason, I mean, if everything would go horribly wrong and you would lose this money, can you still pay for lunch? Yes, because you have a job. You're not dependent on this money. So I believe the way how you approach trading, that there's a good chance that this account will grow. But we never know. When it comes to the markets, we never know. There could be a few trades that could wipe out your account. But I believe it won't change your lifestyle. It won't change the lifestyle that you have right now. And this is very, very important. See, often I tell married couples, okay, would your spouse still be okay if you lost this money? And if she would be super upset and leave you, then probably you shouldn't be trading with the money that you're trading right now. But you get the idea here. So in your case, I absolutely think that you, at this point in your life, the way how you approach trading, it might be better to trade the money instead of investing it.
Yeah, I absolutely agree. And I also think that if you go in and say, hey, this is money I can afford to lose, I don't think if you're trading the strategy, the wheel strategy, and you put on 50 paper trades, I think that a worst case scenario might be like a 25% dip. Or even if things got really ugly and it was 50, I don't think it's going to be 100. Yeah. But if you have that mindset going in and you have the potential to generate these great returns and compound it, you'll be far better off.
Yeah. So long story short, since you asked, I believe if you're investing it into an index fund right now, you're being way too conservative. You have many, many, many more years ahead of you. You can be conservative later in your life. At this point, the way that you're approaching trading, I would say trade it. And I hope that this discussion helps everybody here to understand of why sometimes we say, okay, it makes sense that you trade this money, and sometimes it might make sense for you to invest this money. Anyhow, hope this helps.